Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 8th, 2022. Happy International Women's Day and welcome to the live stream. Alright, we're going to get started in just a second. I just have to check if I'm streaming properly, so give me one moment, please. All right, let's see. Okay, looks like it. Okay, so we're all live and well. Please don't forget to like the stream so other people can see it. It has more visibility on YouTube. Subscribe to the channel if you're not yet subscribed. We'd love to have you, and let's get into it. I'd like to talk today about how I'm trading this volatility, how I'm trading this range, right? I said in a prior episode, in the morning episode, that we were in a region that I consider very challenging to trade, okay? This is not a novice trader's sort of paradise. This is, a lot of oscillation. You're going up and down and up and down. It's a confined range. You can't just buy and hold. Your stops are probably going to get hit very, very quickly if you're not paying attention. As you can see, there are large price swings, right? Up and down, up and down. Like, this is extreme volatility, right? And it's hard to tell, where price is going, to be honest, without a decent degree of analysis. So that's what I want to talk today about. Like, how can you successfully trade this region, right? Using basic principles. I just want to keep it as simple as possible because I feel like irrespective of what your trading style is and your background is, are you a Wyckoff person? Are you an Elliott wave person? Are you a RSI person, basic support resistance person? Are you pure price action? It doesn't matter, right? I want to talk about relevant and principles, basic guidelines that everybody, irrespective of your style, can use and should probably use and is probably using to make sense of price action as volatile as this. So if that interests you, then stay tuned. And let's get into it. I'm actually in a trade right now. I'm just checking it really quickly. I'm going to start off with the most important thing. The most important thing to trading a region that you recognize as being difficult, you recognize as being capricious, volatile, low probability, right? Outcome, meaning you can't just say it's going to go up or it's going to go down. The most important thing about trading such a region is not in knowing where the price is going to go. It's not in the analysis. It's in risk management. Risk management is everything. I can't stress this enough. You can make millions and with poor risk management lose it all in the blink of an eye trading, right? You can make a lot of money and lose even more if you don't have good risk management. So what am I doing now? I'm just going into my trade and I'm showing you I've got a really small position size, and that's on purpose. I size down. That's the first thing I do when I trade a region that I'm less confident in, right? Like, I size down. My leverage goes down, my position size goes down. I size down because I feel like I'm likely to make more errors, and I do not want that to affect my larger portfolio, right? So that's number one, risk management. And part of risk management is knowing when to size up, knowing when to size down, knowing, when to use high leverage, knowing when to use low leverage, right? And just an example, let's go back on the main chart. I don't like how slow Phemex's chart is. I'm in a long right now, by the way, and it's just a scalp, right? It's a scalp because we're going up and down, up and down, up and down. I'm going to give you the reasoning as to why I'm long right now, okay? And how I got into it. But the idea about... damn it, I lost my train of thought. What was I saying? I remember the last thing I said. I want to remember the thing I said before last. Why am I sizing down? It's important. Risk management. Duh. Let me go back to the Phemex chart and see. I was talking about something. I know I was talking about something. Yeah. Let's see. I don't need this right now. What the hell was I saying? I did get good sleep. That's important. Sleeping well. Have you ever traded on little sleep and with lots of nerves? It doesn't matter what you know. You trade like shit. I know I do. It's important to get good sleep and eat well and all that stuff. Yeah, so I sized down because I make more errors here. Yes. I remember. I wanted to show you. I said I sized down and I leveraged down once I got into this region. Okay, once I get into correction, this type of chop, I size down and I leverage down. But as soon as we get back into impulse, I leverage up again. I make my entry and I leverage up. My trading strategy can be boiled down into 3 words: scalp, scalp, swing. 2 out of 3 times, or if not more, I'm scalping. And then relatively, maybe less than a third of the time, I'm swinging, meaning I'm taking a position and I'm holding it, maybe overnight, maybe for multiple days, but majority of the time, price is consolidating, it's correcting, so I'm scalping little moves. But then these impulses are more predictable, they're easier to read, so I'm swinging those. Okay, so that's what I wanted to say, and I wanted to show you on this chart. Okay, that is when I swing, that is when I increase my leverage. I take my position, I know more with more certainty where the price is going. I'm more comfortable, kind of swinging for the fences when I'm in the general direction of the trend, and I know we're not going to zigzag. Okay, let me just check and say hi. Is there anybody in the chat? Okay, do we have anybody in the chat? Hey, Nicholas. Hey, Nicholas. Yeah, I lost money here too. And this is not the only time I've lost money in correction in these types of regions, and it's probably not going to be the last time I lose money. It's just a question of, can you make more than you lost, right? You're always going to lose money trading. It's part of the game. It's just, as long as you make more than you lose, you're fine in the aggregate. And then every time you lose, also, Nicholas, I'll add, trading is essentially a journey of self-mastery, meaning you have to master your own trading technique and yourself, your emotions, all that stuff. So what did you do to lose that money? Write it down, learn from it, understand it, gain lessons, right? Develop, grow. If you don't do that and you're just losing for the sake of losing, then it's going to be hard to improve, and it doesn't really do anything for you as a trader, for your career as a trader, right? So that's important. Losses are very important, and they're great. They can be sources of great wisdom and insight if you use them correctly. Okay, so next, so basic precepts. How do you trade these kinds of crazy ranges? First and foremost, you're gonna have to do it on low time frames. Okay, you're going to have to scalp. There's no such thing as swinging this price action. If you're the type of trader that's only comfortable taking a position and holding it and then walking away, then guess what? Once you recognize such price action that's ranged, that's going up and down and up and down, just leave it alone. Okay? Some people can't leave it alone. Some people need to be exposed at all times. Like myself, I love trading. I love being exposed. I love being in a position, right? A scalp or a swing or whatever. I do it for a living, so I kind of need to. I need to make money. I can't take too long off. I'm not at the point in my career where I have enough saved up to not make money regularly. But if you're the type of trader that knows, I don't like this type of trading, I can't do this, then just leave, okay? Just don't touch it. This is a no trade situation. If you would like to trade this, but this seems challenging for you, reduce your position size, reduce your leverage, first and foremost, and then go small, meaning go into the smaller time frames. I use 1 to 5 minutes, right, in scalping, because you need to see detail. You can't be on the hourly chart with this kind of price action, right? You need to see what's going on, okay? So ever since we got in, I'm simply, let me just get rid of this really quickly. And let me get rid of this as well. I'm simply looking at the range, right? We clearly have, let me draw a line actually instead of doing that. We clearly have a top level of resistance and a bottom level of support. Okay, we just so happen to know that top line is the 382. If we go back really quickly, we see that the 382 Fibonacci retracement level, and it's the 382 of the third wave, right? So we go into our Elliott wave understanding. If we count 5 waves down in this impulse, right, we're at the 4th wave, a complex correction, clearly a complex correction, the 4th wave, okay? And I'm just looking at this really quickly, sorry. Kind of stalled out here. Let's see. I'm going on 1 minute chart. I just want to see what's going on. I feel like it hasn't moved, and sometimes it's gonna do something. Is it gonna go against me, or is it gonna go in my direction? Looks like, yeah, against me. I'm gonna cut this. I'm gonna cut this. I'm gonna cut this trade so I can focus. Okay. So, that's another thing. I mean, trading requires a great deal of focus, right? And I'm trying to live stream and trade at the same time. Probably not a good idea. I'd rather cut for a small loss or minimal gain or whatever happened. I don't even know if I lost or gained. I think that was almost exactly a 0. My P&L is showing that trade was 0. I've never seen that before. Plus 0. But that's best because if I'm watching the charts and I'm talking, I'm running through trading techniques and stuff like that, I can't devote my attention to actually trading the chart, scalping, right? It requires a great deal of attention. It's like a high performance sport. I do my breathing and my focus is there. So anyway, that's part of it. That's part of how I trade it. Anyway, I was saying that the 382 we know represents the upper limit, okay? Because that's the 382 of this third wave. Because we've seen 1, 2, 3, 4, 5 waves down. and taking the Fibonacci retracement from the second wave to the third wave gives us a 382, and we know that the fourth wave cannot exceed the 382. Okay, so that's where we're at. Let's see. Let's go back now. Let's go back now. Okay. So, all right, I'm just looking at this, and I'm going to set, so this is a trade, a potential trade, okay? I'm not going to take it right now. Reason being, this may be a wave 4. Right here, it looks like a wave 4, right? In an impulse down in this B wave, right? This looks like an A wave to me. This looks like a B wave. I don't like trading B waves. I'm with Steve. I don't like them. But what I'm going to do is I'm going to wait. If this indeed is a reversal pattern, I'm going to wait for this B wave to pivot into an impulse. Okay, so that's what I'm looking out for. All right, and that's going to be my next long if that happens. Okay. So anyway, going back, we see that the upper limit and the lower limits are established, okay? I wanted to get rid of all that, and here we go. Get rid of this, and I want to get rid of the fibs. I need to go on higher time frame. Okay, much higher time frame. It's like, okay, there are no fibs, but the color for some reason is showing me like it was on the charts. All right, we're good. It looks like we're getting a bit of a bounce here. I'm getting a bit of a bounce. I'm going to let it bounce and make a higher high before looking to go long, okay? I'm going to let it bounce and make a higher high before that happens, okay? I'm not going to try and catch it on the way bottom and then get caught in a downtrend. All right, so you establish the top and the bottom. I think that's really important. Whatever you like to do, however you like to trade, it's important to realize or recognize your range, okay? Your range top and your range bottom. And this may seem simplistic, but it's really effective. It's a really effective way of just trading common sense, okay? If you're at the range highs, you want to look for shorts, right? So when we're close to here, if price every time has hit this level and gone down, you should be looking for shorts, okay? Not to say that we can't break ranges, okay? Because you always break ranges for big moves, right? That's the whole point. That's why they're called big moves. But before that, you have to kind of make your way towards one of the ends, either the top or the bottom, and you're going to range. You're going to go up and down. So here you go, down, up, down, up, down, up. You know, it's kind of just looking at it as a child would look at this. It's just up and down price action. So when you're up, look to go down. When you're up, look to go down. When you're up, look to go down. Very simply. When you're down, look to go up. When you're down, look to go up. Okay? And so it makes things a lot easier. What's tricky is, what do you do when you're in the middle? Okay? What do you do when you're in the middle? You were up here, you went down, And so in the middle, you can either continue going down or go up, okay? So that doesn't help you as much there. However, there are other things you can do to help yourself make sense of price action, right? You can recognize patterns. What do you see? You see that we're forming some sort of, I just finished the pattern, some sort of inverse head and shoulders like pattern, okay? Price action tends to be symmetrical, okay? So look for patterns. That's what I'm looking out for. So if I had to put money on it, the next move is going to be something like that, okay? That's just based off of what was printed here. Does that make sense? So like, no matter what you're trading, if you're trading Wyckoff, Elliott Wave, RSI, blah, 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 all the indicators or no indicators, pure price action, these are general principles that can help with range-bound trading, okay? And that's not even getting into our edge using Elliott Wave analysis, all right? So here, let's go into this really quickly. Let's jump down into the 1 minute and see, did we make a higher high yet? See that we're pushing. Okay, I'm getting volume divergence. Okay, so here's an indicator I use. Look, I'm seeing this go up, volume's going down. I'm on the 1 minute time frame. By the way, if you're serious about trading and you're not able to access the minute time frame, you may want to upgrade your TradingView account so that you have access to the 1 minute time frame. I don't know how you can scalp on 15 minutes time frame. Like, you know, I'm sure it's possible, but this level of volatility and being able to count waves and use your edge with your understanding of Elliott Wave and in Fibs is difficult to do without a good sort of chart with enough information, okay? And I know not every token or coin has a clean chart with a lot of information. Bitcoin does, but if you choose a random shitcoin, you probably won't have a clean chart. It's probably going to be very, very spotty, okay? So let me just take a break, check the chat. If there's anybody in the chat. Okay. Cool. Don't forget to like the stream. Wait. Okay, cool. Yeah, don't forget to like the stream and subscribe if you're not already subscribed. All right, let's keep going. So yeah, 1 minute may be free, like you said, Nicholas. It's just, if I recall, if my memory serves, it was that I wasn't getting enough information, so my minute chart was very spotty and it was almost unusable. Okay, it wasn't clean like this. Before the upgrade. It was a long time ago. If you want to upgrade your TradingView, by the way, best time to do it is on Black Friday, around Thanksgiving. It's like half or less than half the price. That's when you should renew your membership or buy a membership, if you want to save some money. All right. So what are we looking at here? Is this... All right, let's see. We're going... This may be it. Why? Because we're forming a higher high here. All right, this is really scalping here. So yeah, there we go. If we were to break up here, then that's continuation. We're gonna form a higher high. If we break down, then we break down. It looks like we're breaking up. And volume is confirming. I might want to take this. I'm going to see the next volume bar if it's confirmed or not. I'm going to get ready. I have my position, size. I know my invalidation. And I want to take this. And I took it. Okay. But yeah, no use FOMOing into stuff and, you know, going short when you meant to go long, all that stuff. basically, if this is correct, my stop is going to be right below here. I don't want to make a lower low, okay? So very simply, I'm going to go into my Phemex portal. And if you guys appreciate me showing you actually trading live, you know, showing my position size, I know, like, you know, a lot of YouTubers, a lot of sort of influencers, they want to show you $1 million trades and stuff like that. I have no such trade, you know. I'm trading like, you know, everyday money. I make a few $100s a day. It's a good day, you know. If I made $1 million a day, maybe I won't do YouTube anymore. Not like I'm getting paid out of YouTube. I'll probably do YouTube still because it's fun and I don't get any money for it, and I don't care if I get money for it. But all I'm saying is I'm not doing $1 million trades, but you don't need to do $1 million trades to trade professionally. Yeah. And a lot of people who do $1 million trades, I don't know if they're the best traders anyway. 38417, because a lot of people, they got their money by buying and holding Bitcoin at an early stage, and they just trade on the side for fun, and they make their trading money from their YouTube and referrals, if you don't know. So yeah, I want to set my stop here. I don't want to make that lower low, okay? So I put my stop right there, and, you know, I'm fine losing whatever I lose here if we go back, because I can always get back in. It looks like we're making some sort of initial diagonal. Looks like we're making some sort of initial diagonal. So a 53535, but again, this is on the minute chart, so it's hard to see much of anything. That being the case, if this is indeed a diagonal, or an impulse, I want to hide behind the 618. Okay. We can come down, but not beyond the 618, and I use the 50% level of the 618, so about here I would take a small loss were we to fall below that region. If we fell below this region, we're definitely going to go lower, and it looks okay to me because so far volume, and I mean, this is a very, very, very tough read because it's such a small sample size and small time frame, but volume's going down as price is going down. That is okay. So we'll see. Okay. All right. Anyway, back to talking. So it looks like we did make a higher high and retest at the 618 or above the 618, because we have this volume bar here that shows a breakout or some sort of positive price action. It's supporting the positive price action. And if we take our fibs from the bottom to the top, we see that we bounce right off the 618, okay? So that kind of confirms, at least for now, an impulse. It's hard, I say at least for now because we're on the minute chart, so it's very volatile, and things can happen, you know, at the turn of a hat, and it does look like we're breaking out. So yeah, that's pretty much how I do it. You know, gotta scalp these things, and now, obviously, we're in the trade. Looks like it's breaking out. And if you guys get this and you're able to do this systematically, right? It's not to say that you're always going to be correct, right? You're not always going to be right. You're going to make mistakes. That's part of the game. It's okay. The thing is just getting these principles. So what am I going to do right now? All right, I'm in a trade. The trade's going in my favor. I'm going to de-risk. What does that mean? That means minimize my risk. My stop was down here. I'm going to move my stops up so that my loss is less. Let's say price does turn against me, right? In the end, I'm fine, because instead of losing $7, now I lose $4. You see what I mean? It's the beautiful thing about this is it doesn't matter your size. Psychologically, it does. Psychologically, if I'm properly sized and instead of trading 83 Bitcoin, I'm trading 700, okay? Then I'm going to be a little more nervous, maybe. Probably not going to take this trade, to be honest with you. When I'm sized up, I'm only trading my best setups. You know, if I'm sized up, I'm trading a big impulse, okay? And then I'll move my stops. I'm not going to trade a B wave like this cavalierly. But with a small size, there's less anxiety. You can... I'm a rules-based discretionary trader, okay? Discretion, it's at my discretion to take that trade or not take the trade. But I have certain principles that I follow, okay? It's not that I'll never take this kind of trade, but I think, you know, based on my skills and my understanding, I can win this trade, okay? If I analyze things as I am doing, okay? So I'm not going to put my stops up here in profit. Why? Because it's too close to the price action. The price can go up and down and stop me out. I don't want to get stopped out. I want to stay in the trade. But I know that if price comes down here, okay? If price comes down here, it's forming a lower low. This is no longer an impulse. So that's why I put my stops right below this low, okay? Right here. And it's far enough away from the price action so price can do whatever it wants and it can keep sort of matriculating upwards, okay? Let's see. Just trying to make... Yeah, we hit the 618, so I'm fine. The other thing I wanted to say about this is... what did I want to say? Targets. Of course. I gotta set a target. I haven't set a target. And you know, typically, before taking any trade, you have your target and you have your stop in mind, okay? When you're scalping... I move my stops all the time, okay? And some people say, oh, never move your stops. I don't do that. Like, that's fine for some people, I guess. They're just really, like, they're not discretionary rules-based traders. They're just, like, very systematic. My stop's here, and I'm going to let it hit. I'm going to watch it get hit. Like, that's good and bad. Like, I have to be disciplined enough where I can acknowledge when I'm wrong, okay? For me... I have 3 categories of wrong. I might be wrong. I'm probably wrong. I'm wrong. And I'm definitely wrong. I can move my stops if I might be wrong and I'm wrong. Less if I'm wrong. But if I'm definitely wrong, I have a red line. I cannot move my stops. And every time I have, it's resulted in losses that I've always regretted and said, I wish I had just left my stop. Okay, so that's just me. Discretionary rules-based trading. Like, I have categories of wrong. Okay, I don't just leave my stops, get in the trade, and turn around. I'll be able to kind of decide: do I want to stay in? Do I want to not? Do I want to give it another chance? So on and so forth. Yes. Target. Let's say this works out. What's the target? So the target for me for this is going to be the top of the range. As I said, I'm looking and I'm seeing that we have some sort of range high up here, okay? And we're finding our way back up. And so now I'm going to pull on my Elliott wave skills, okay? I'm going to use a bit of Elliott wave here to get a target. And yes, price is going against me, but I find where the stop is because we touched the 618. And I am, let's see. Let's go back. I might want to dip below the 618 once again, just in case. This is the 5-wave structure. There we go. You see, I'm moving my stops all the time, but it's not just willy-nilly. Yeah, I'm using my understanding of a retrace of an impulse. I know if this is 5 waves, okay, the impulse is going to go to the minimum of 382, maximum of 618. If it crosses the 618 and dips below significantly, and I put my stop at around 50% or below, then I know that this impulse is a failed impulse, or it's not an impulse, it's a correction, and we're going to pretty much just swing down. So that's why my stop is there, and I just moved it because I measured the impulse as we printed, and the 618 was lower than I previously was, right? Even though I put my stops right below, we can make a lower low according to Elliott wave theory and still matriculate upwards, because that would just be a wave 2 correction. I hope everybody kind of understands what I'm doing here. All right, now let's finally make a target, okay? And the way I want to make a target, I want to use my Fibonacci extension tool, given our understanding of Elliott wave theory. So back to, let's stay on the 5-minute chart. And if you're getting value from this, definitely like the video, share, subscribe, do all that good stuff, hit the notification bell. Like, I'm a full-time trader. This is what I do for a living. And so, like, I enjoy sharing this and vocalizing it. It helps me as well. Like, this is what I do every single day. All right. So first things first, I'm gonna change to this. I don't like that chart as much. I'm gonna go back to that chart to set the target, but I'm going to talk through why I'm going to set my target, what my target's going to be here. I'm gonna talk through it here. So I'm scalping. I'm not concerned too much with everything else. This is where I'm looking. This is kind of my life right here. I'm seeing this positive price action, and then it comes all the way down. Okay, for me, as an Elliottian, that's an A wave, this is a B wave, and this is a reversal pattern pivot. Okay, that's just like, that's a quintessential A, B, C pivot. Okay, that's three flat corrections in succession. So I know that this was the initial kind of, this was the initial move. This is my initial sort of A wave. This is a composed B wave. And I know what comes next is an impulsive wave. Do you guys see that? Everything corrective comes in sets of 3s. When you're scalping these corrective moves, think 3. Everything is 3. Okay? So, and we're going to break this down further, but let's just look at this move, right? I said this before. I'm actually looking here. I'm looking at this again as A, B. Remember, B waves need 3 legs, right? First leg, second leg, third leg, okay? So everything is in 3. So the A wave is 1, 2, 3. The B wave is 1, 2, 3. Now, after you get an A wave and a B wave, what comes next? According to Elliott wave theory, you need an impulsive wave, okay? That's why we have to pump impulsively if this indeed is an A, B, C. I hope that makes sense. Now, the cool thing about Elliott wave theory is you have so many tools and so many, you have the context, you have tools, you have everything. If you really master Elliott wave theory, there's really no limit to what you can do with trading and on a chart with charting. So I take my Fibonacci based extension tool, distance of my A wave, retracement of my B wave, then I target the one Fibonacci extension. And where does that end up? Range highs. That's confluence. So where am I going to set my targets? Very simply, going back here, I'm going to go and take my Fibonacci extension tool, just like I did on the TradingView chart. Distance of the A, retracement of the B, and then I'm going to target the 39565, okay? Like right below. I like to set my targets right below because, and I'll tell you the story in a second. What is it? 39565? Whatever. I'll change it if it's not. Okay. Yeah. So I like to set my targets right below. Okay. And what I'm going to do is I'm going to... Oh, yeah. I wanted to tell you the story. I have done my analysis in the past. I did my analysis. The price went exactly where I thought it was going to go. I went to sleep, woke up, I lost the trade because my take profit was right on the line and price wicked right below it, like a smidge below it. Okay, so maybe like I pulled the fibs a little wrong or whatever. Like it just made me never put it directly on the line ever again. I always take my take profit a little bit before, so it's a conservative kind of take profit. So that's why I do that. And look at range highs. I mean, let's zoom out. I want to find confluence. Like I want to see the 382. It looks like we're targeting the 382 right now, I believe, because we're targeting range highs. Okay, so I'm taking my Fibonacci retracement tool from the top to the bottom of 3, and it's close. It's not there, but it's close. Okay, I wouldn't be surprised if we did go to the 1, 2, 3, 6, because remember, and I'll show you here. According to Elliott wave theory, the C wave of an A, B, C correction typically goes to between the 1 and the 1, 2, 3, 6. Okay, I always take profit at the 1, right? But it's likely it goes to the 1, 2, 3, 6 and even wicks above the 1, 2, 3, 6. But again, I try to take profit conservatively, and so I'm setting my profit at the 1. Okay, let me know if you guys get whatever I'm talking about, and if you have any questions. Colby, hey Colby, size doesn't matter. Yeah, size. Size does matter, Nicholas. It doesn't matter in that. Yeah, I can do this with whatever I'm trading right now, 88 Bitcoin, or I could do it with 700, right? It doesn't matter. It's just, it matters, like technically and fundamentally it doesn't matter, but trading is all psychological, right? And when you're trading, sometimes you don't perform as well when there's so much pressure and, oh my God, 700 Bitcoin, right? Like when I'm trading size, things are a little different. Like, I get a little tighter, get less creative maybe. You know what I mean? Like I want to take fewer chances. So it's important to, that's part of sizing up, getting confident. And I think it's easier to size up when you've secured enough profits to take a hit and you're not wasting away months worth of work, right? Months worth of gains. I think sizing up is definitely a challenge. In that sense, it does matter, but technically you're right, Nicholas, it doesn't. UVST, is it possible that we are in a triangle? What do you mean triangle? Can you specify? Everything's possible, by the way. Totally, everything's possible. So, yeah, that's basically my ideas on trading ranges. Very simply, you want to define your ranges, right? Top and the bottom. When the price is at the top, think about going, to the bottom. Price at the top, think about going to the bottom. Price at the top, think about going to the bottom, okay? And vice versa, or likewise, prices at the bottom, think about going to the top. Now, the next step in trading ranges is understanding where you are, so that you're not a victim of this or that. Because if let's say the one or two times you don't have a stop, or your stop is too generous and price wants to break the range, you will get nuked. Okay? So it's always important to know more or less when it's likely or when it's probable that the range will no longer be the range. Price will travel outside of the range. And in which direction is price likely to travel? That's the beauty of Elliott wave theory. It gives us this map, right? And if you're subscribed to the channel, you'll know we've had this map of price action using Elliott waves, and the way we got these 5 waves that I'm going to draw out is by pretty much doing an Elliott wave on these smaller movements. So it's not like willy-nilly. I'm not really guessing here. So we identified this as being wave 1, this as being wave 2, this as being wave 3 right here, wave 4 coming up here, and then wave 5 going down, obviously, somewhere down there, okay? So what do we know is that if price gets up here, we're able to now say that we're at the top of the range and the maximum retracement for a wave 4 correction, right? Given Elliott wave theory, wave 4 can not correct beyond the 382 Fibonacci retracement of wave 3. This is wave 3 from the top to the bottom. We see that the 382 is at 39.7, okay? And 39.7 is our range high. So that's why it's our range high, because it's the top. Now, this is what we've gotten thus far, okay? Question is, when did wave 4 start? Wave 3 ended here. Wave 4 started here. Okay, so at this point, right here. And now, if, let's say, price does matriculate up to our range highs and touch the 382, question is we have to ask ourselves, if you're busy scalping, and, you're doing great, and you're making money, and you're using good risk management, all that stuff, you still have to know where you are. You still have to know when price is likely to break out. Price is likely to break out. Now, given our understanding of Elliott wave theory, it's very unlikely that it break to the upside, right? Our analysis would completely have to be turned on its head. And whatever this is, this price action, this previous price action may just have been a fluke, or it may be finished, right? It may be that this is 1, 2, 3, 4, 5 or something. I don't know. But it would have to be that this, what we see here, is some sort of reversal, okay? But then it wouldn't even make sense to reverse in this way without coming down to the range lows before going up, okay? So let's just say that whatever our analysis is, it's very unlikely that price just break out right here, okay, without first testing the top, coming down, and then going back up, okay? That's usually how price breaks out. You test, retest, breakout, okay? So we don't do that. We go straight up here. It's likely that after we go here, we're going to go down. Question is, when we go down, are we going to continue down, okay? And you kind of don't have to know that, to be honest. you just have to keep it in the back of your mind, because let's say you're trading the ranges, okay, and you're trading this. You make your way up here to range highs, and you're like, well, now that we're at range highs, I'm going to look for some short opportunities. I'm going to make a careful entry into a short. I'm going to use good risk management and put my stops beyond the 382 or whatever. And then you start going short. And you go short, and you're like, maybe I should take profit right here. You would still be okay if you took profit at range lows, because chances are we do bounce at range lows. Question is, when we bounce, are we going to bounce and go all the way back up again, or bounce and continue? And it's likely that we bounce and continue, but you wouldn't know that if you didn't have context. So that's the beauty of Elliott wave theory, and it provides some context, some sort of map for what price action is doing, even when we're laser focused on a small range of price action. Okay, so that's basically how I'm trading these ranges. I'm keeping in mind my larger analysis. Doesn't mean it's correct. It just means that this is my best guess thus far. Okay, it's likely for me, based on all the things I've just said, that once we come up here, we continue down, and even more so. Okay, I don't know if we continue down immediately more so. I'm going to address that in a second. But at least let's say that once we hit range highs, we continue down. And the way I trade this is basically support and resistance, right? Range highs. We're at range highs, I short. We're at range lows, I long. And we're in the middle, then I use extreme caution, and I try to look for symmetry. And here I have some kind of symmetry in a pattern. Okay, price action has aesthetics. There is such a thing as, I don't know why, but they're patterns that are aesthetically kind of balanced, and so you can always use that as well. So let's see. So just like I showed the example, you think I'm thinking threes, right? Elliott wave theory states that all corrections happen in threes. 1, 2, 3. When I did that 2, I put 3. Do you see that? That B wave is in 3. 1, 2, 3. This is 1, 2, 3. Like, if you see it enough, it'll be second nature to you. Like, composed B waves will be nothing. Let's see it again. Here. This is corrective price action. 1, 2, 3. Okay? 1, 2, 3. That's a complete sort of move. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1. Sorry. Here you can see it. You'd have to zoom in. That was this morning. There we go. Now you can see it. 1, 2, 3. Okay? That's basically the break of structure here for this move. That was when I knew to go short, because I saw this range was broken here. Okay? And so I knew breakout, retest, breakdown. Okay? And so that is basically an A wave. You're going to have a response to that, which is a B wave. Okay, 1, 2, 3, right? And then what comes after that? So I hope you guys are following me. It's basically a big puzzle. If you like puzzles, you'll be really good at this, right? You just have to see the patterns. So if you see what I'm seeing here, we have this range. We're in this range for a decent amount of time, and we broke it here with this A wave. An A wave is what? It's an initial break of structure. It's just a 3-wave structure that breaks whatever structure you were in. This A wave broke the bottom of this structure, which was at like 38.7, okay? After an A wave, you always get a B wave. A B wave is essentially just a response. It's a counter to the A wave, all right? And B waves come in threes. Tricky part about B waves is they can be composed. So just like we did the Elliott waves in the impulse and we nested them, you want to do the same thing with your B waves. So start inside and go out. 1, 2, 3. Do you see that? Those 3 waves we just printed? Now do 1. This is your outermost. 1, 2. This is our pivot. Because price always has to pivot. And the third leg is going to be impulsive. Don't lose focus now. Remember, you have your A wave. All this is your B wave. What comes after? What comes after? That's why I think it's likely that we leave this, that the fourth wave is done. It's likely. I don't know for sure, but price action is showing me right now that it's preparing. I know that what comes after this, once I'm going long, I'm going to take profit here. I know that I'm waiting for a pivot and I'm going short. Why do I know that? It's because the pattern says so. Okay, I would be surprised. Obviously, you can be wrong, but I'd be surprised if we didn't. Because again, I have an A wave. That's an initial break of structure. A B wave, a counter to that, and then a pivot impulse that's going to take me in the same direction that my A wave started. Okay? That's why once I get here, I'm going to take profit. I'm targeting range lows. And range lows means, let's zoom out. Range lows means I'm coming all the way down here. 37, okay? And so if, let's say this prints out and we get our impulse, I take my profit, we will have satisfied, I said this morning, the two basic tenets of a corrective wave. It's composed of 3 waves, and we have our minimum retracement of the 236, okay? We went as high as the 382. So this wave 4 does those 2 things. It's both composed of 3 waves. Let's see. Sorry, 1 second. 1 second. Just gotta think about something. Yeah, okay. Got it. So this is my wave 4, essentially, for all intents and purposes. This to me, this right here, this ABC is a reversal to me. Like, this was the end. This was the pivot. This was my wave 4 correction. This was my pivot. This is my reversal. So ABC. No, that doesn't make any sense. I'm sorry. What am I trying to say here? It's possible that this, once we make our way up here, is our finished wave 4. It's not, I don't know for sure, but it's possible, because the 2 things, one, the minimum 0.5 retracement. So if you take the Fibonacci retracement tool, you see here that this wave retraces, this wave retraces upon itself by 0.5. Okay, so that's 1, 2, 3 waves. There's 3 waves, and within the contiguous structure, there's a 0.5 Fibonacci retracement. Okay, that's the minimum retracement for a 3-wave structure. That's a standalone 3-wave structure. Okay, and then what comes after? I would say you can start thinking in terms of a complex correction, because if price action doesn't do this, A, B, C, right? The typical sort of three-wave correction, a simple correction, and it does something like this, that screams complex correction. So we have to bust out, okay, W, X wave. X waves typically retrace between the 0.5 and the 618 of W. So I'd say that's a viable X wave. And then a Z wave. Yes, a Z wave. Okay. Let's see. Yeah, that's going to be the Z wave. So it's going to be first leg of the Z wave. I gotta zoom in to make sense of this. Sometimes the patterns escape me. Sometimes it's so clear. Sometimes it's like you have to like look at it and then it jumps out at you, you know? It's kind of like finding Where's Waldo or seeing a, you know, I don't know, seeing a pattern in a crossword or something like that. You just sometimes have to stare at it. I saw it, but then it kind of left me. So I'm just going to take a second. Let me get rid of this. It's kind of bothering me. Go back on the smaller time frames. Okay. So if this is W, this is W, this is X, this is X has to be composed. I don't know what to make of this, to be honest. This looks like X to me, but it would make more sense if X were composed, yeah? So it doesn't make sense unless X is composed. Meaning, X is something like this. So W's 3 waves, X is 3 waves, and then Y is boom, boom, boom. Okay? That to me is the most likely sort of count for the complex correction. And again, see, you're trading this and you don't even know, how to count the complex correction because you're not doing your trades based on how you can count the complex corrections. That's the difference between charting and trading. Charting helps with trading, but trading is a skill unto itself. Charting is cool, but whether this is a WXY and WXYXZ or whatever, that can help make you money, but that's not enough to make you money. I hope everybody understands that. Charting is kind of much more straightforward, much more simple. Once you get into trading, it's a whole different can of worms. So yeah, that's pretty much what I'm seeing on the charts. That's why I'm seeing it. And that's how I'm trading this. I would not be surprised if this, and typically what we see with these complex corrections is that you have these slanted ranges. It's a slanted channel that produces 3 sets or 5 sets of 3 sets of 3 or 5 sets of 3. We call it double 3 or a triple 3. Okay, and once that's done, you're finished. So again, I wouldn't be surprised if we were finished. If we're not finished, maybe all of this, and this is possible, right? What I'm calling WXY can just be 1. And then we get an X and then a Y. That's possible too. That's also possible, right? Because that's why, trading these regions is so complicated, because you don't know what's coming. But you're not trading based on knowing what's coming. You basically trade what's in front of you when you're scalping, and you let price action tell you what's going on, and you don't have to predict anything. You just take it pattern by pattern, move by move. Okay, so I hope this is helpful. I mean, be easy on yourselves. This stuff is challenging, and you're gonna make a lot of mistakes, and you're gonna lose money. But just try to keep your size small so that you're not losing too much money where you have to quit. Because if you stay with it, you're gonna get it, and you're gonna master yourself and your system, and your system will be your system. You can learn from other people, and you can adapt and adopt aspects of their systems, but at the end of the day, everybody's trading system is as unique as their fingerprints. All right, let's go into the chat. What do you guys So yeah, Nicholas, the book I recommended, yes, it's a lot of things are in there. I mean, the art, it's like doing math, I'd say. You have to learn the basic rules, and then once you learn the basic rules, you learn how to use the rules to get creative and make portraits, right? You got to get creative. It's all about creativity, I think. Creativity, and then once you get creative, you have all these great ideas. Then risk management demands that you be honest with yourself as to when that idea that you had is wrong, or really wrong, or a little wrong. Do you see? And that's how you control your risk. You can have all the great, you have all the ideas in the world. That's not going to make you money. What's going to make you money is knowing when that idea you have needs to be given up on, and then you need to reanalyze and make a new plan. So that's the key. Risk management. Is it possible that we were in a triangle in the large time frame? UVST, let's see. So let's zoom out. Triangle. Are you talking about this right here? Ascending wedge? Yeah, you can call it an ascending wedge. And what do ascending wedges do? They typically break down. They can break up, but they typically break down. You want to say that the top is here and like that? Sure. Yeah, I mean, that's the beauty of trading, and this is why so many people who are introduced to this are so passionate about it. Because it's this and that. It's not this or that. Yes, we are both in a triangle, both in a wave 4 correction, and perhaps in a complex correction, in a channel that's slanted upwards. Like, all of those things can be true. And the other thing I was looking at on the hourly time frame while we're on it, I saw this. Like, it jumped out at me. And I know that now I've removed the smaller counts. So I know that this was, according to my analysis, the fifth wave of a smaller count, smaller nested count. But I couldn't help but see this. A wave. Okay, so let's say we come up. Sorry. Let's say we come up there. B wave. C wave. I couldn't help but see that when I was looking on the hourly. So for me, I was like, ooh, I know once we go and test the range bottoms, I'm looking for a move back up to complete the wave 4 correction? I don't know. I have no clue. But the beauty of it is you don't need to know. I hate when people say nobody knows. Maybe there's a fucking guy out there who knows, okay? Just because you don't know doesn't mean nobody knows. I don't know, okay? There's maybe, I'm not, no, who knows? Everything's possible, right? There's gotta be someone out there that is so fucking good at trading, so good at charting. They know where price is going, okay? They know exactly if wave 4 is complete or not, okay? I'm not there, and that's okay. You don't have to know to make money and to be successful at trading, okay? What you have to know is what's in front of you and what's likely, what's probable. I think that's the, basic. You have the probabilities in your mind, and, as a result of not knowing, I think it even makes you better at doing risk management, because when you know too much, sometimes you get overconfident and your risk management suffers because you haven't been burned enough, or you really do believe you know every single move, and that you may very well up until a point, but the day that you miss, it's going to be tragic because you may very well lose your shirt. But yeah, I couldn't help but see that pattern, that A wave composed B wave, looking out for C wave, but who knows? We'll see. In any case, I'm going to continue to trade this range. Like I said, I'm trading up right now. Once we hit the top, I'm going down. I'm going to size up, because for me, an impulse is a home run. It's where I size up, I'm more confident. I know exactly where to put my stops behind the Fibonacci levels, right? It's a lot easier for me. It's a lot more simple, right? It's pure impulse. It's my bread and butter. And then once we start forming this, I can tell just by the size of wave 1 if we're likely to break this bottom, right? And very quickly, for those of you who may not know, there's something I use. I don't know how I came up with it. I think just studying this stuff so much, nobody told me, but I think I just noticed that the minimum extension for an impulse, any time frame, is always 2236 minimum. And it works out for some reason because the minimum extension of wave 3 from wave 1 is 1. Typical extension is 1618 to 2, okay? Minimum extension for wave 5 is the 618 of wave 3, or the inverse 1618, inverse 1236 to 1618 of wave 4, okay? So anyway, using the minimum extensions of 1 to 1618 and 2, and then the 618 of extension 3, some way, somehow, 2236 kept coming up. I keep seeing 2236 as a minimum. So what I do, one of my tricks, is if I see a wave 1 and I pull a Fibonacci extension, right, distance of wave 1, retracement of wave 1. If the retracement's not finished, I just estimate 0.5 retracement, right? It's between 0.382 and 0.618. Then I see where my 236 is. And if wherever my 236 is where I set my take profit, right below my 2236, or right above, whatever, right behind my 2236 for a conservative take profit. So that's how I'll know. Even with the first wave, let's say my trade plan works out and I take profit up here and then we pivot, right? A pivot is basically a flat correction, A wave, B wave. A wave signaling a break of structure, B wave, retest, and then boom. That first wave, I'll know if we're going down for wave 5 or if we're likely to stay within the range. Either way, I'm trading up. I'm going to increase my size. I'm calling all troops for the blitz down, because that's how I trade. And when you're sure, and when I say sure, I mean you're trading something that's higher probability. Obviously, you still use a stop and you can still be wrong. So you still practice good risk management. But all things considered, when you're more sure, you have to take your risk and swing for the fences, right? You can't always trade small. At least I don't, because I need to make money and pay for things. And what the hell is going on with this trade? All right, let's look at it I'm gonna look at this trade really quickly, and then I'm going to sign off because I'm gonna have to get ready for my wife's party. So yeah, don't forget to like the stream, guys, if you're getting value from this, just so other people who are interested in Bitcoin, interested in trading, technical analysis can also see it. Okay, looks like we did get some sort of impulse and a retrace, and it's just now breaking out. Okay, let's go on the 1 minute chart. Okay, I see. Okay, I see a 53535. I see a leading diagonal. Okay, and I see this as being our wave 2, and it's just now forming a bit of a reversal pattern to break out. So I'm fine with this trade. I'm fine with the stop. And just not even thinking Elliott wave theory. I'm looking at this pattern and I like what I see. I see a kind of a inverse head and shoulders, and that's a bullish pattern. So I'm okay being long in this position. My loss is always like somebody said this. Novice traders look at how much they're going to gain. Pros look at how much they're going to lose, right? I'm playing defense all the time, so I'm always looking, okay, what am I going to lose? 643, okay, I'm cool with that. I can live with that. My R is a risk reward. I'm risking $6 to make $90. That's cool with me. That's a trade I'll take. So I'm going to just leave it and go to the party. And if I lose, I lose. If I win, cool. So that's pretty much it. Hope this was helpful. Hope this was useful. Guys, don't forget to like the stream. Subscribe if you're not yet subscribed. And I will see you all tomorrow. I'm sorry I can't take questions today just because I got to go get ready for the party. All right, take care, everyone. Good luck. Bye. Oh shit. I don't know why I couldn't see chat before. I missed a bunch of chats. Let me just answer some chats. Okay. Okay, hey Steve. Hi Isaac. What is your count on lower time frames? My count, Isaac, is, I don't know what you mean by lower time frames, but this is my count for what we're doing now, for this impulse. Looks like 7 waves. Can it go higher than 39.8? Anything's possible, Nicholas, but it's improbable if this is indeed a wave 4, because we know wave 4 can't retrace beyond the 382. And so if we take the Fibonacci retracement from the top to the bottom of 3, you see that the 382 is at 39.6. So we can wick above, but I can't see us breaking that. Looks like 7 wave. What looks like 7 waves? Your book just arrived. If I read it, will I get how you're counting? Yeah, I mean, if you get the basics, you'll understand it, and maybe you'll have different insights. That's the beauty of trading. It's an art. It's the science of Elliott wave theory, the science of using those mathematics, Fibonacci, and all that stuff, and then it becomes art when you interpret it and you use your creativity and you see the patterns and you develop your own trading system. What's WXY, Nicholas? That's how we count complex corrections. So simple corrections are counted ABC, right? Impulsive price actions counted 1, 2, 3, 4, 5, be it in a 5-3-5-3-5 pattern or a 3-3-3-3-3 pattern or whatever. If it's a leading diagonal or ending diagonal, we count it 1, 2, 3, 4, 5. Corrective price action is always in threes. It's counted as ABC when it's simple. It's counted as WXY when it's complex, or WXYXZ when it's a 333. Yeah, and that's in the book. One more big dump to scare the pants off the little retail investors. Maybe, Yaki. Yeah, I give you that. You're one creative fellow. And often unpredictable ideas win in this market. I'm sure the whale who makes that move knows. Dean, you should live stream more often. Colby, yeah, maybe I will. I mean, Tuesday is like my day, but I'm we'll see. Isaac, how did you know it's going to retrace to 38.4 earlier? So 38.4. What's 38.4? 38.4. Do you mean here? No, wait. 38.4 is like here. Basically, maybe you're talking about this move, Isaac. The move I did in the morning. Okay, yeah, okay, this one. As I said, I'm looking at this, and I see this right here. And this is an initial break of structure. If you look at this as being the support, okay? Hold up 1 second. What's going on here? Sorry, 1 second. Trying to see what the hell's happening. Okay, this looks like a retrace. It's fine. Okay, if you look at this, and this is what I did, honest to God. I'm just looking at ranges, right? Obviously, I use my Elliott wave skills, but keep it simple. Support and resistance. This bottom range was held. Then it broke. What do I know about breaking ranges? Anything breaks, you have a break and then a retest. Okay? Now, once I have that main premise, I make use of my Elliott wave skills. Here I see 1, 2, 3, 4, 5. Okay? That means we use an impulse to get into this range. Then, once we're in this range, I count very simply a reversal pattern, okay? And that goes like this. 1, 2, 3, A wave. 1, 2, 3, B wave. And then A, B, 1, 2, 3, 4. I guess this is kind of a diagonal impulse, right? So that's how I knew. Basically, without even resorting to, Elliott wave theory, I saw the break, I waited for the retest, got in on the retest. That's what I did. Okay. I think that's everything. All right. Thanks for coming, guys. I appreciate it, and I'll see you guys tomorrow. Bye.